You need to do a self-evaluation to decide what your risk assessment is. And of course, having a financial advisor is very important, but also having either a realtor or some sort of real estate money manager or somebody that can help give you some expert advice, both on trends, because every local market is different, and maybe expectations of what's going on kind of at a macro level, like interest rates, inflation, or global trade, to give you some kind of good advice to coach you on what may or may not make sense in each market, particularly as some markets grow faster than others. I have a city that's just 30 miles away from here that it was decreasing 7% during the recession while we were increasing 4%. So each market, even if they're side by side, reacts differently. And so making sure you're getting some expert advice from someone that's actually in the profession is very important to doing that analysis.
Welcome to the Real Estate Mogul MD podcast. Thanks for tuning in and taking control of your financial future. This is a show where we not only motivate and inspire, we give you actionable real-world experience to help you live life by design. You'll hear journeys and stories from other physicians, investors, coaches, consultants, and entrepreneurs. And now, here's your host, Brett Riggins. What happens when a luxury real estate pro marries a physician and builds a business that helps other doctors invest smarter? Today's guest bridges the gap between design, construction, and real estate investing while serving an 80% physician client base with insights on mortgages, return on capital, and building wealth beyond medicine. Adam Pretorius is a top 1% luxury real estate agent, developer, and owner of a couple construction companies as well. His wife is 100% stock market, and he's 100% real estate. And together, they've helped dozens of doctors rethink how to build a life and a portfolio by design. Hey, Adam, welcome to the show. Tell me a little bit about where you're sitting right now.
Yeah, Brett, thanks for having me. I'm excited to be here. I'm out in Iowa City, Iowa, University of Iowa, where the Hawkeyes here. My wife actually works for the Children's Hospital, the famous wave that we give during the football games. And I predominantly work, I'm a real estate agent, and I predominantly work with the medical community. And about 80% of my business is working with doctors and other medical professionals.
Very, very interesting. So a unique background here. You design first real estate approach. So we'll get into this. You got, construction background, construction company. You just said you're a real estate agent, and your wife is a physician. How do those worlds collide?
I got a lot of hats here, huh? I got to sort through all of them. Yeah, I mean, my public hat, my public face is I'm a real estate agent, so I'm in sales, residential sales. But I'm also an investor, and I invest with a number of builders. I have income properties. I do land development. I have some passive and active roles in a number of construction companies. And I do flippers, remodels. So I do a lot on the real estate side, but predominantly what I do is do sales. And I work with a lot of medical professionals and helping them find homes. But as they advance, maybe in their time in the community, they want to start getting into other investments. And so I help them with anything from investment opportunities that could be your simple income property, a rental property, or other real estate investments that kind of exist in the area.
Do you remember the first time you saw a doctor client succeed financially through real estate? What was that like for you?
Yeah. I think that the hardest thing for doctors, and also coming from a family that's all medical background, is you come out with a lot of debt, and that debt can make it hard to navigate your first home purchase. But real estate has commonly been an area of the American dream and wealth building in the United States, and I think that is a very exciting time. And I think the first one would be I got my license in this great year, 2008, the recession, and one of my first clients was actually it was a doctor that was a fellow here, and they've since bought 2 or 3 homes, and it's been fun to see them grow and succeed in that area.
I really like the idea of helping them find, of course, the home to live in, right? The primary, but then building on that relationship to make that turn into investment too. So that's a really cool path. What's some of the most common financial blind spots you see with physician clients?
Yeah, I mean, obviously, we already hit a little bit on that, right? And that's coming out. You have a lot of debt coming out of school. I mean, I have multiple siblings that are in the medical industry, and they come out, quarter, 500,000 in debt. So you have a lot of this debt, but you have the income, and so finding a way to navigate and get capital, because whether you're buying a home or you're making an investment, you need two things. You need capital and you need credit. And so making sure that you focus on those things, again, capital and credit are important. And credit's going to be tough when you got that big debt. And so there's some tips I can give you here in a minute on that. But then also capital. We need to make sure that you have the capital for either a down payment or have some form of loan product that'll allow you some flexibility on that capital requirement. And of course, as you pay down on your student loans and increase in your career, you have more opportunity maybe for some additional investments. There's really two types of loan products that exist when you're shopping for a home. And that would be what we call the secondary market, which is you go to a bank, they originate the loan, but then they sell it like stock to the lowest bidder. And that has a very strict criteria. It's a box. You either fit in that box or you don't. So whether you're buying in Florida, in Iowa, where I live, or New York City, it's the same criteria to fit in that box, which can be tough if you're a doctor coming out with a lot of debt, because you have to have a certain down payment, certain credit score, other criteria that make it a little bit more challenging. Often I see doctors start with the second loan product, which is called an in-house loan. And an in-house loan is what it sounds like. The individual bank that you go to is financing that loan internally, meaning they can make their own set of rules, their own criteria that might go around that loan. So that box can be stretched or made a little bit bigger. And why this is important is because the term that we hear a lot in the medical community is physician's loan. And a physician loan is just an in-house loan. So there's no two are the same. Every bank will have their own little slap that they put the name on, physician loan, but each bank has their own in-house criteria. And so a physician loan often can include little to no down payment. We'll have exceptions for having a lot of debt, which comes from student loans. And those are generally very good starting places for a lot of the medical industry for starting out on building a home.
Interesting. And when we're looking at these rates, what would you say, just off the hip here, what does a rate look like in general on the physician loan with the air quote on it versus a standard, non-jumbo type loans, like a standard $300,000 mortgage?
Yeah, and obviously, anytime you have a bigger down payment, you're going to get a better rate. And so, on your conventional mortgage, your secondary market, say if today's rate was 6.25 on the secondary market for the best credit score, and you'd have a 20% down payment, you might be looking at something like 635, maybe 645, somewhere around there on a physician loan. But you're able to do usually up to 90 or 100%. Finance, meaning your down payment requirement is significantly less, and so your capital requirement is less. Hence why the rate has to be a little higher. But this is a big benefit, particularly from the medical community when you're coming out of your fellowship and years in school and have that debt.
Did you say 9-year?
90%, 90% that they could finance.
Okay.
But typically the loan would be about a 5, maybe 7. Top of it would be a 10-year fixed.
Okay. So more along the lines of an ARM, an adjustable rate, but you've got those fixed in the beginning. And I'm just imagining that those lenders are betting on that high income to cover that as the physicians grow in their profession. Let's talk about these rates too. If your perspective is interesting when you're looking at comparing the mortgage interest rate to what a potential return would be if you were to go ahead, get that mortgage, borrow that money, and then have that access to that capital. So do you compare the interest rate against, like, say, a return on a real estate investment or something like that?
Yeah, absolutely, Brett. And I think that's some of the biggest opportunity here in real estate is one of the lowest rates to borrow money that you can get is going to be in real estate on mortgages. And so we want to be conscientious of what our opportunity costs are, because there was, at least for the last 5 years, a number of periods of time where you could borrow money on your real estate investment on your house, say your house was paid off, at a rate that was like almost 50% or less than what the average stock market was making. My father, who's also a physician, I know my mom and him fought over this, but he asked me, and he took out a $500,000 loan on his house that was paid off purely because the rate of return on the stock market was over twice what he's paying on his interest on the loan. And so that might seem unnecessary at his age to be taking out another mortgage, but his opportunity cost here was 3-4% in additional revenue. And so I think when you look at real estate, we need to be conscientious of what other investments could you use to borrow that capital from, because it is an asset. Even if it's paid off, it's an asset that over time you have some ability to take some liquidity from it.
This stuff can be complicated, and I know I'm not a physician myself, but speaking through my experience, knowing that there's a lot of risk mitigation, some challenges with taking action, how do you navigate decision-making without getting stuck in the analysis paralysis with physician clients?
Yeah, I think that's a very tough balance, right? And my dad would be a little bit more on the as I use as an example, or he'd be more on the risk tolerant side, whereas some of us are more risk averse, and there's nothing wrong with that. And you do need to balance that because the stock market also goes up and down. You need to do a self-evaluation to decide what your risk assessment is. And of course, having a financial advisor is very important, but also having either a realtor or some sort of real estate money manager or somebody that can help give you some expert advice, both on trends, because every local market is different, and maybe expectations of what's going on kind of at a macro level, like interest rates, inflation, or global trade, to give you some kind of good advice to coach you on what may or may not make sense in each market. Particularly as some markets grow faster than others. I have a city that's just 30 miles away from here that it was decreasing 7% during the recession while we were increasing 4%. So each market, even if they're side by side, reacts differently. And so making sure you're getting some expert advice from someone that's actually in the profession is very important to doing that analysis.
Mm-hmm. Someone with actual results. And you mentioned stock market. You said your wife is 100% in the stock market and you're 100% in real estate. So what's that like at home?
Yeah, this is to prevent us from butting heads. I guess we kind of go in our own way. So obviously, in any investment you want to do, you want to diversify. You don't want to put all your money in one bucket because things can change. And so what we decided in our household, what worked for us, was that my wife is a strong believer in indexes in the stock market. And so she puts all the investments in that side. And then I put all our investments 100% into real estate. So our diversification is between the two. Obviously, within the stock, she does a couple other different investment portfolio things. And then within real estate, I have us diversified within either income properties or on builder relationships or flippers, various different revenue streams that can exist within that kind of real estate portfolio. So I think it kind of just for us, it made sense for us to have this diversification. Obviously, I'm the expertise at that, and she had someone that she trusts and works very closely with on the stock market side.
Has either one of you tried to convert the other when it comes to investments?
Yeah, I mean, we have long discussions on it. I think the short answer is I go ahead and I trust her with what she's doing on her end, and I do on my end to keep our marriage sound.
Yeah. That's a whole nother world. See, my wife is my better half for sure. And in our business, she's 50-50 in everything we do. And the more that she's involved, the better that we are. And we have a great synergy between the two of us. She is everything that I'm not. So if it's anything like that for you guys in the stocks and in the real estate, it's a great combination. In this type of combination, do you have any insights that this contrast has given you working with medical professionals who have heavily invested in the market but curious about real estate? How do you twist what you've got at home and present that to your clients?
Yeah, I often get maybe somebody in the medical profession that's come back after a while and said, Adam, I enjoyed the stock market, but I want to get a little bit into something maybe a little more tangible to do stuff in real estate. So I just want to have a casual conversation, explore what's out there. And I think obviously the first step is when you're doing in real estate development or real estate investment, the first one you want to do is your personal house. And so they've done that in this case. And then I say, okay, your next probably best step is probably to do an income property, to do a rental. And keep in mind that this isn't like the stock market. It's not completely hands off. There's a little bit of work involved. And so we go through and talk about that. The next one might be investing in a remodel or a flipper. What does that look like? The next step or another option would be doing a builder partnership, whether that be an active partnership where you're actually a partner with that builder, or more of a passive where you're just either a co-signer, investor of some sort, whether that's your capital or your credit or a little bit of both, and you're just getting paid on the return. And then the next would be like land development, or the gold standard, the one I haven't done yet, would be doing like a multi-unit dwelling, a high, like an 1824 unit complex that might be 4 or 5 stories and has a number of income properties. I think there's a lot of different avenues you can go into in your real estate portfolio, and figuring out where you want to start or land or what your risk tolerance is when you start looking at that is probably your first assessment.
Yeah. And I love that progression, Adam, because it allows you to build that relationship tolerance too. Because in the smaller investments, when I say whether it's a flip or whatever, the time is tighter, right? Less risk, the time is tighter. Those longer relationships, that's where you increase the risk if you don't know certain things. So having that ability to build that relationship along the way, if you're working with the same contractor or the same flipper partner or something, it gives you that ability to build trust in them based on results, right?
Absolutely. I mean, I think it is a relationship market, just like every market. But real estate, it opens a lot of opportunities and doors when you start just on small things, and then you can kind of have a progressive increase in your investment, maybe. But you start on that flipper remodel, and you decide, let's try a new construction, a spec house. That's a house that's built without a buyer that you're going to try to sell for a profit. And those are all investments that require some form of hands-on. It's not just put money in the stock market and wait for that stock to perform in return. So you just have to decide what your time commitment is in your work-life balance.
Mm-hmm. In this process too, you have some interest in a couple of construction companies. How does that give your clients an edge, especially with rentals or flips? From what I'm seeing, you're on the sales side on the higher end of luxury, and typically we're in the flip world, especially in those first flippers, you call them the first ones. We're going to target the average sale, like the average sale and lower. That way we know the product can move. So how do you use that experience from the higher end piece and the construction side to benefit your clients?
Yeah, I think you first of all, you hit the nail on the head here. There's a couple different loan products, right? So a new construction is going to be a higher end product, and any flipper, we want to kind of go for more of a medium to medium high, because you're not going to be able to compete with a new construction. So a little bit different market products. But look, I think the value propositions of what we learn in working together with buyers, with medical professionals and other professionals, is what people like and don't like, and knowing the value propositions of this is what's trending, this is what's not. For example, we see more rooms now post-pandemic, and so making sure you have more rooms for offices, for gyms, for exercise rooms, for kids playing at home is an important trend. And so making sure that we then translate that to whether that's a remodel product or a new construction product is valuable information and insight. And the more that you do in your real estate investment portfolio, the more knowledge that you too will have that you can translate and bring into your investments as well.
More rooms. That's an interesting trend. I see that as well too. And even in the homeschooling piece too, where there's more people, and I don't know the numbers of this, maybe I'm just speaking from my surroundings, more homeschooling. So you need a room for a homeschooling, right? Something that's separate from that. Now, from the design world, that's one choice, right? But can you speak of any other items that increase ROI versus being purely aesthetic upgrades?
Yeah, I mean, I think there's also a big trend for us to be looking more at lifestyle amenities and community. And I think community is an understated word, because you're not buying just a home anymore. Generally, people are looking for a community that exists. And so, of course, that goes back to the age-old saying location, location, location. But community is important. So, location and being near amenities, whether that be walkability, trails, nearby parks, how far is it to the grocery store? Those things have become a lot more prevalent since post-pandemic. And so that's really important to your investment as well. When I work with a lot of medical professionals, I generally tell them that if your investment is purely as an asset that you want the ability to have liquid to turn and burn as quickly as possible, what we want to do is we want to target other popular neighborhoods that fellows go to when they're going to school here, because a fellowship is usually 2 to 4 years. And so they're only here a couple of years. And so those are constant movement and turnover. And those type of neighborhoods are good investments, because that's whenever you are in match season or there's the turnover, that's the time to try to sell your house if you're buying it as an investment. And so finding those markets and that kind of lifestyle choices is probably just as important as design to making sure that your investment has a good appreciation.
And working with an agent that knows those things about match and season and everything. So that's very cool. What kind of homes are your physician clients buying, and why?
Yeah, that's a great question. I think it'll kind of depend on the client, but some really prefer as low maintenance. So like things like stacked flat, we think of those as like condominiums. Those are what you commonly with an elevator on one level. Those are popular usually with empty nesters, but also with doctors, because you get home from a long shift, long day. You want something that's no maintenance. You don't want to worry about mowing your lawn. You don't want to worry about, the roof that might have got damaged in the recent storm. All that is done by an HOA. And so that could be a popular option. Then we have people that might have households that have families that have multiple, room needs. And that comes back to, we're probably looking at a single family or at least a townhouse with multiple bedrooms. Kind of varies on the client. But I think, going back to the location in the community, a lot when I do the tours, I generally focus on where do your colleagues live. These are 3 or 4 spots where your colleagues live, and ask during your lunch at the hospital. Ask where do you live? Where do you live? What community? Why do you like it, and why? And that's generally we see people move to those similar pockets.
Do that without being the weirdo at the table. Hey, where do you live, Adam? How do I get there?
Joe Smith lives here, and Paul lives there.
I'm taking notes. Yep. I won't show up. That won't be me outside your window, I promise. Hey, what systems or automations do you suggest to help doctors invest without becoming a second job? Because we all know it takes a little work, right?
Yeah, absolutely. And I mean, I think you talked about it earlier. It's a relationship building industry, and something for you to consider when you want to get into investments in the real estate portfolio. Finding a good agent to work with is important. They'll be able to connect you with those other resources, whether that be a property manager, inspectors, other builders, remodelers, but also your loan officer, and also your financial advisor. Often they have a lot of good connections, and they can recommend you on people to connect with in that industry and market as well to get some of those expertise.
All right, here's some fun ones. We got 3 quick ones. We're going to do quick fire here. So just real short answers. Ready? One design tip you wish every investor would follow.
No more black.
Good. Dream property you would build if money wasn't a constraint.
Oh, lakefronts.
Nice. Favorite way to unwind when not flipping homes or strategizing portfolios?
Building Legos.
Building Legos. I love it. Yeah, that Legos are a big thing here in our house as well, too. So, man, that was awesome, Adam. Thank you so much for your time. Hey, how can the listeners connect with you and follow these trends and everything you're doing out there in Iowa?
Yeah, I'd love for you to follow me. Check my handle out on Instagram. It's just my first and last name, all one word. And I post design trends and tips a couple every week, and love to give you more knowledge of what's going on in the real estate industry.
Perfect. And we'll put that in the show description too. And that's Adam, Adam, and the last name is Pretorius, correct?
That's correct.
Awesome. And say it perfectly for us, because I know I'm going to mess it up, right?
It's Adam Pretorius, the Praetorian Guards, the Roman Knights. But when there's 2 of them, they got married. That's Pretorius. So I'm not Nectorious, just Pretorius.
That's awesome. And that tags right along with that Instagram handle. That's awesome. Thank you so much for your time today, Adam.
Thanks for having me.
Today's episode showed us that it's not just about buying a home. It's about buying back your time, building equity with intention, and designing a life that works for you. Whether you're 100% real estate like Adam or 100% stocks like his wife, the lesson is clear. Your wealth building plan should reflect your strengths and your season. Please follow Adam at Adam Pretorius, that's Pretorius, on Instagram for weekly design insights. And just check him out. Really cool guy. Thank you for your time and, more importantly, your attention. This is the Real Estate Mogul MD.
This episode is powered by Crescent Tech. If you are looking for a CRM built for real estate investors, discover Streamline REI by Crescent Tech. Simplify, automate, close faster.